What's going on YouTube? Trader Joe back again with a quick video, hopefully to help you on your journey to becoming a consistently profitable trader. So today we're going to be covering three very important topics that a lot of new traders seem to ask me, and I kind of forget about it because after 8 years of trading, I just seem to overlook this thing. So it's been asked if I can cover this topic. It is going to be your TradingView chart setup. Not only your chart setup, your chart layout, your chart tools, and also how many currencies or pairs should you be looking at in your watch list, how to set your watch list up. And it's something a lot of new traders need to have access to, right? They have to have access to a nice clean chart, all the pairs that they need, all of the tools that they need, and it needs to be easy so they can plan their analysis for the day, for the week, for the month, for the year, however you want to trade. So I'm going to go ahead and get that set up for you. And for those of you looking for a mentorship program, I do have a mentorship course. It is a one-on-one styled course, A through Z, on how to get started trading, how to use proper risk management, how to use chart tools, how to enter trades, exit trades, manage trades, trade. It's everything you need to get started and start making money. I also go over my simple strategy that I use that got me funded, got me payouts, got me flipping accounts, making $1,000 a day. Do with it what you will. If you want to learn, go ahead and click the link in the description. It's through Kajabi. Yeah, that's about it. Let's get into the video. Alrighty, guys. So we are on TradingView.com. So let's go ahead. You should have your account set up, or not even. You can just have the free account. Now, I'm pretty sure all the features that I'm about to show you and just how to get everything set up, you should be able to do on the free account. I do have one indicator on here, which is not mandatory. You can actually do it yourself on this chart. So let's go ahead and get into first the tools, how to set up this toolbar here, which is very, very important because you have to have easy access to everything that you need. And after 8 years, these are the exact tools that I have been using. So let's go ahead and start with the first one, which is the trend line, right? Let's go ahead and show you where to find that. That should be at the top. So you want to go right below that and click the arrow and just go ahead and star it. And that'll create this bar right here. So you'll just have the trend line up here by itself and you can move this bar around. Very, very important to have that on your screen all the time. It won't go away. You don't have to worry about it. It'll stay there, right? You want to go ahead and click horizontal line right here. Star that. Horizontal ray, star that. Vertical line, star that. And then you should have basically this right here, right? All four of these lines. And these are I use this for period separators, to mark maybe a new session, which I'll show you a different way to do that. You've got your horizontal line, which marks basically levels left and right. And you've got your ray, which is just for levels from wherever you're marking to the future. If you want to have an idea of where price might reject or touch or break through eventually, you can go ahead and do that without it having to be all the way to the left-hand side and confusing you with any levels to the left-hand side. And your trend line obviously is, your generic trend line. I don't really use this often. I kind of use it just for fun, to be honest with you. If I'm trying to explain it to somebody or show somebody something during like a coaching video, I'll use a trend line. So let's go ahead and move on to the text box, the call out, which is very important because the call out is where it marks a specific area, and then you can type a note in there that reminds you. You can type a note in there that reminds you of why you marked that area, right? Compared to a text box, which is just typing something. That can be found right down here. You go to your little text right here. Click that arrow. You can go ahead and star text, and you can star call out. Let's go ahead and go to our price range. We need price range, and that is going to be in price range. You're going to go ahead and star that. And the price range is to decipher the amount of pips, which is very important. For me, specifically for my strategy, I have to make sure that there's a certain amount of pips, there's a certain gap in the market. It has to make sense. I can't just sit here and just take any trade willy-nilly, right? So price gap or price range measure, that's 88 pips worth of price where the bearish candle opened, not where the high was, but where the candle opened and where the candle closed all the way down here. So it's a 100 pip move to the downside. And this is actually the same exact setup that I called earlier on my Instagram, if you guys want to follow me. So this was before the trade. That was after the trade. We had an NFP today. It was a disgustingly volatile trade that I didn't take too much advantage of. But it's okay. It's a Friday. I don't care. But if you guys want to follow me, nvr.dwn.fx. I have a brand new page, 61 followers. Nobody knows me. And I post some fun stuff, emotional, motivational stuff, I kind of update you for my new YouTube videos, how to withdraw money from your account. Anyways, follow me if you want to. I have a bunch of breakdowns and stuff on there. So let's go ahead and follow up with our Fibonacci retracement. This is a crucial one. I think every single trader, even me, like 6 years ago, looked into Fibonacci, and I thought that was the answer to success. I thought everything was Fibonacci, and you could say that it is, but you can't use it on every single setup. It just doesn't make sense to use it on every single setup because you miss opportunities and you use it as a tool. If it makes sense and it aligns with the strategy, then you can use it. But you want to go ahead and it'll be the third one down. Click that arrow, add the star right there. So the Fibonacci, if I say let's go down to the 5 minute, first of all, you should be identifying if we're in an uptrend or downtrend. Clearly everything's bullish, right? We're in an uptrend. We didn't make a new low. We had a high break above this area here, came down, created a higher low. We had a liquidity grab, obvious. It's very normal in Forex. You have to get used to that. It's not rigged. You just have to understand how to work with price. And then a continuation to the upside. Massive push to the upside, breaking a new high up here. So if in my mind I'm assuming there's buys, I'm only looking for, let's go down to lower time frame. I'm only looking for some kind of buy. So once price had this major push to the upside, price would come down to here. That'd be awesome. It never did. So instead, it kind of started trending right here. Well, once we have this pullback right here, and pushing up, you can go ahead and draw your Fibonacci retracement from there to the highest high, right, until it pulled back, and it pulled back 50%. Well, actually just barely, so probably wouldn't even have gotten this trade. I would have waited for it to get down here. But let's just say you took it there. Right, this is just for an idea. Stop loss at my red line that I marked there. You can copy that if you want. And yeah, goes to full take profit, whatever. So let's just try it again, right? This is why everybody talks about Fibonacci and they think it's an amazing thing. Let's see what it does again today. And today was a very volatile day. So look, it came down to the same exact retracement as over here. So it didn't even come down to where you could buy. But let's take a look right here. I bet you it probably comes down to our 764 level. Look at that. Right, so I would probably enter right there if I was to use it at the golden zone right there. I'm pretty sure you guys have heard golden zone. If you haven't, it's basically a 61.8% retracement on any price movement up or down, and retracing back to that area is where there's a higher probability for price to continue back in the major direction or major trend. That's where buyers or sellers will get into the trade because that's where price is cheapest for them, or that's the best possible entry to continue up. Hence why people do this, because you get an amazing risk to reward. See, you get a 1 to 3. So all that being said, you got your Fibonacci. We're going to go ahead and add our long position. That's what I've basically been using right here. And that's going to be in the right here. So 1, 2, 3. Oh, sorry, the fifth one down. Go ahead and star that, and star your price range if you haven't already. That's already there. Now, this is just for analysis, right? There is a way that you can trade using this tool right here. You can trade on TradingView doing this if you connect your broker, and however you do that, you do that. I don't trade on TradingView. I trade on TradeLocker, and this is just for analysis to get an idea. All right, and you got your short position for sells. You want to take a sell? All right, let's take a sell. And then last but not least, actually it's probably the most used tool that I have, is our rectangle tool, and this helps me mark up, you know, said gaps in the market like this, right? If I remove this and I wanted to do mark this right here, that's a gap in the market that needs to be filled. The same way I did analysis for the Instagram post where I filled that out, or I put it up online of that gap being filled. Gap here needs to be filled, pushed up. Gap here needs to be filled, pushed up. All on an uptrend, right? Again, let's take a look at it again on any other one. There's a gap here. It needs to be filled, filled up. There's a gap here, it needs to be filled, filled up. There's a gap here, it needs to be filled, filled up. Doesn't matter if it didn't make a new high, but we just filled that gap, right? Push up, there's a gap here, price came back to it, push back up. And if you want more of a breakdown on it, obviously go on the website and you can click the link in the description. There's a discount for 30% off. It's a 4-hour course. It's just everything that I think you need to know when it comes to trading and learning how to trade, especially as a new trader, because it's a long journey, and I think you need somebody that probably actually cares about speeding that process up, because you don't want to be banging your head against the wall, going down rabbit holes of YouTube University. That's how every trader learns, and then they just get overstimulated, overwhelmed with all the money that everybody else is making, and you don't focus on your journey, which is what you need to do. So I go over a lot of psychology as well in the course. So I try to keep it as real as possible. And let's go ahead and add our or focus on our chart layout. So the chart layout, I'm not going to go too in depth with this because I just wanted to remind you that there's all these options for a chart layout, right? You can have two screens showing two different prices or currencies or pairs or stocks or whatever it is. You can have 7, you can have 8, you can have not, whatever you want. You can have so many. And at the end of the day, you don't need all of that. Focus on one thing. That is overstimulating your human brain. You are not a computer. You're not. I'm sorry to say, you're not a computer. You're not a robot. So you can't have 10 different stocks or pairs unless you're like super smart. I would believe that you can separate it and compartmentalize your emotions or your focus, because that's just overwhelming. You shouldn't be. I've done it all when it comes to trading multiple pairs and no. 1 to 2 pairs is okay, but don't sit there trading 7, 8, 9, 10, 11. No, stop. I've had this whole thing filled up of pairs and different currencies. So if you want to add anything to your watch list, you can just go here, add symbol, and then type it in. GBP, JPY. So if I type that in, you'll see it right here. And this right here means the broker that is supporting the data, like is feeding you the data. So Oanda, which I have an account with them, they're actually a regulated broker. And you got Forex.com, which is a regulated broker. Pepperstone's regulated. So they try to go with regulated brokers. That way it's as, trustworthy and, formidable as possible. Like, these people are not going to go ahead and screw everybody over on price, even though everybody thinks that it's a regulated broker. They're backed, So anyways, that's how you would add that to the watch list. I only have 3 pairs. I do not trade USD JPY. I use that strictly for keeping up with trend of other pairs that I may be focusing on. Plus, this is one of the most traded pairs in the world, and I'm in the US, so I like to keep an eye on that while trading GBP JPY. XAU USD, gold is something that I like to trade if there is absolutely no trade for my GBP JPY. There's no currency trading. Commodities are always going to be volatile, especially at 9:30, because if you're not in Forex, but you're in options trading, you're in stock trading, you're in any other trading, futures trading, you can trade gold. So keep in mind, if everybody's trading gold, there's going to be a lot of volatility. So let's move on with that. Just giving you guys a little quick tips and advice. That's pretty much it. But another thing I was going to tell you is that if you want to add sessions on your chart, you can go to sessions right here. I'll show you what it looks like. This helps me just plan day by day and not doing this, right? Because this is a problem that a lot of new traders have, and you probably have never thought about this, or now that I'm bringing it up, you realize it. If I hide this and I look at the chart and I say, I got to find a trade today, and I'm looking at frickin' an entire trend for the last month. Why am I doing that? I'm a day trader. I'm an intraday trader. Why am I looking at Sunday the 29th of last month for any trade that's going to happen here? That's why I have my sessions, because this helps me decipher the day's volatility, the day's trend, and this is important for me. Now, a lot of people may not use this. That's fine. If you want to add this, you just got to add it at the indicators tab right here. Go ahead and click that, and you're going to go to sessions on chart. If you just type session, it should pop up. If not, type sessions on chart, Oryx underscore AIF. When you click that, it'll pop up and it'll bring up all the settings, and you can change it. The inputs I have, these are the inputs if you want to take a picture of it. Those are the inputs. And this is basically telling me that London session. So London session is one of the most volatile sessions of the entire day in Forex trading, especially for GBP JPY. All right, there's a lot of research that goes into why I have this the way it is. And this has been like this for years, but from 3 a.m. to 12 p.m. So I have merged London session, where the volatility really comes in for the beginning of a new day. When you're in the US and it's 3 a.m., it's a new day for us, right? But 3 a.m. for London session is like prime New York session for everybody in that part of the world. So I have it set from 3 a.m. to 12 p.m. So I have connected session of London session leading into our New York session. So I can say, okay, London session started this move. Let's see what happens in New York session, because it's either going to counteract the move from London or it's going to continue that move from London. At the end of the day, the trend is your friend. So don't overstimulate yourself. Don't get confused. The trend is your friend. And yeah, that's basically it. So if you want to save that, you can change the style. So this is how it should be, I think. I just have all of these at low capacity. Let me see, background, which one was it? Yeah. I don't know if this really matters, if you want to do that. None of this matters on the visibility part of it. So, and it's very bland, but this is how trading should be, nice and simple. So, other than that, I think I covered everything. If you have any questions, you want me to go over something else on TradingView, or you have a question about literally anything that has to do with trading, leave a comment. Leave a comment. I have enough knowledge on this to help you. I'm not doing this for just stupid content. I'm trying to help people who are new traders that are coming into the market and are like, oh, I'm gonna go do all these different thousands of trial and errors and fail hundreds and thousands of times just to find out that it's so simple and all I have to do is this. This is how simple it is, man. So, yeah, leave a comment, subscribe. All right, can you subscribe, please? Thanks. I have like 63 subscribers. Should I even make more videos? What's the point? I'm just kidding. I'm going to keep making videos. So stay blessed, stay safe. Love you, brother. Love you, sister. And yeah, any questions, let me know. Bye-bye.